On this one, with trends, I'm looking for clean high highs and high lows, or vice versa, lower lows and lower lows on the 4 hourly time frame. If we back up a little bit to before the presidential election, there's just that's just not clear at all. That's why I'm marking the trend as grading it as 2 out of 10. Key levels done. Patterns done. It's a round number, 6,000 on the S&P 500. Break the psychological 500 triple Qs. Previous close on the 6,000 on the psychological level there, so that's very interesting. Huge gap here. Normally all gaps get filled. Normally, not guaranteed. So the market needs to fall just 13.13%, and if it falls for like 20%, well then we're under that psychological key level. Very interesting. Couple that with the head and shoulders pattern on the Nasdaq. I'd expect if the price landed at the key level, the lower key level, that would get a turn to the downside. But where, like I've got a speed of entry chart here that I've made to help me size my positions. If the market's highly volatile, there's more likely to be more day traders. We're more likely to see break and retest. And so I've just basically moved my risk to reward ratio higher, so towards the 3 to 1. If there's low volatility, more likely to be less day traders. The trade setups are probably, the price is probably not adhering to the key levels as much. So I need to be conservative rather than aggressive. And that's where I'd move my risk reward ratio to 0.5 to 1, or maybe 1 to 1. So I could potentially lose more trades, but be in profit basically. So with this position here, like what's the volatility? Probably, let's have a quick look here. VIX is at 15, so it's not very volatile. So I'll probably be looking for 1 to 1 risk reward ratio. But again, if we see pretty clear break and retest, suggest maybe more high volatility to come, but I'd still run the position at a sort of 1 to 1. If we move to lower time frames, this looks a bit of a mess. So where would I put my stop loss? Ideally, I'd want to enter as close to the key level as possible. Looks to be a bit of a support line there. So what's that? 0.19 looks pretty good for a stop loss. And like obviously, if it comes back to that, it may retest that, but probably less and less likely as we move into open. Market open would be about there. So I would think it'd be unlikely to go above that support line there. So it's all a matter of managing risk reward basically. So 1 to 1 would be there. And what I'd do if we actually got to that level, and push straight through it, I'd move my stop loss. By trailing stop loss to that 1 to 1 target. So that 1 to 1 is basically locked in. What I've found recently is that you might want 2 to 1, but if you don't get it and you actually get stopped out, you may not be profitable because you're just losing more trades. So you have to be realistic, and that's what I've come up with at the moment. And on that risk reward chart, I'm holding in drawdown for less basically, because psychologically people hold losers longer, let their losers run and cut their winners. So psychologically, I'd want to be cutting my losers if sooner. So that's why I put that angle there. And if price moves down into my profit target, what do I want to let that run? So that's just basic psychological lines I put there to guide me. Just guide my decision making basically. Make sure I'm not making those errors. I don't know how slow the market's going to be, but that's about 11 o'clock there. So that's not 5. That's 9:30. That's 11, so something like that. So we actually want to move them a lot. I'll go zoom in a bit. $12.30. We'll move it at $12.30. 9:30. It's a long one. It's probably more like that, to be honest. Yeah. So probably something like that. So we'll give it some time. That's 45. Okay, probabilities of this one here. I think that's rather high. I'll actually move this back down here. Change them to interval and below. Same with that, and same with that. Interval and below. We go to 30 minutes, an hour. Same with these ones too. I typically have them. I think I'm 2 hours honestly. 2 hour interval and above. Okay, so this one here, I think that's relatively strong probability. I'd probably rate that a 7. I mean, nothing's perfect. If it's my target's relatively shallow though. My target. No, I can't find it. 21.030, 21. 20, 21. Where are we? There. So yeah, that's reasonably realistic. We've got to make something up. First one will be 7. Game plan, yes. Candle strength. Let me just look at daily. Neither. Study entry rules. Hope that's recording. Anyway, I did recheck settings. Study entry rules. So on second tab. Okay, second tab. We don't enter any decision arrows. Now, I'm very conscious here. There is conflicting. Arrows there. So I'd expect more volatility around here. So that increased risk and likely chance of being stopped out. However, I've moved the bounce to above that key level, and absorption I've allowed for a break and retest to allow for that extra volatility at that key level. So I'm happy that those entries. Actually, I haven't put an entry on this one, have I? So about something like there. Set. I can't see see the my lines are gone. I'll put them on 2 hour. Okay, so yeah, up to that second level, which is nearly there. I don't think we'll probably get there, to be honest. So I'll just probably put it there. That looks good to me. 1 to 1. That was the plan. That's. I'll just leave that out there because I'm not sure about that one. But we have to. Yeah, I'll get to that. Don't trade around major data releases. We do have economic data on the 13th, which is that a Friday? I wonder if it's a Friday. It's a Wednesday. Okay, it's not a Friday. We've got inflation data, and the market may do nothing. It may just wait for inflation data to come through. So we have to be mindful of that as well. Do 30 minutes. We can see on the Monday there, the price sold off at 9:30. That's something we have to be mindful of because that creates uncertainty. Uncertainty is a dopamine trigger. So, which reminds me, we're not there yet, but this is my. I've come up with some new strategies in order to avoid the dopamine triggers. I have come up with. I'll probably end up with that shade later on. So any of them, if price does move lower, I basically can't see. So it's nearly fully covered. So when price falls at market open, see how I can only just see it. So basically, if you did that here, it's not like a big black or big red candle. It's not like it. I might even increase it a little bit more. Just so it doesn't rattle me. Nine to 15. And it could just as well go up as well. If it does go up, that would be also a trigger. So I don't trade around major support and resistance. What I mean by that is major areas of support and resistance now, due to the extra volatility. For example, if you go on the extra, maybe like the bigger time frames, like for example, maybe this area in here would be major support. Now major support. It was major resistance. Now it's major support. So those areas there, it's is where I'm finding there's just too much volatility. It's just not worth. It's not worth it, in my opinion. Recency effect for best time for the game plan. Which was just there. Sorry. So it's a fair bit of work what I do. So yeah, 9:30. Which see if price is near my entry, I'll still take that. possibly. 930 there. But I'll be very mindful. What can happen is that say the price does move significantly lower at 9:30, and we do a break and retest and I enter. What can happen, or has happened before, is that I'm in my massive profit and I run a trailing stop, but so I end up like floating a massive profit. Then it comes back and hits my trailing stop, and I make a little bit of return, right? So it's a win, but it's only a small win, and that's like a sense of like near miss triggers. And so what tends to happen is you immediately like enter a new trade when you shouldn't, because you're just trading out of dopamine. It's just that extra uncertainty of what price has done, and that near miss, and it all combines for a negative outcome, basically, is what I'm trying to say. So, yeah, we have to be very careful of that. What times on the day as well? What was that? 1 o'clock. That's interesting. 1 o'clock's typically a good time to go short. Well, traditionally. 13. What's this? 13. That's overnight. Sorry, no, that's overnight. 12, 13. Ooh, yeah, still 13. I'm still 1300. So if we do a break and retest, it's 1 p.m. I'm interested in that one as well. Put that one there. Make it a little bit smaller. So that's great. And there's a little bit of price action overnight at 4 a.m. You know, you wouldn't really expect it, but you know, it is like bull and bear entries. Check. It helps to avoid cognitive dissonance and cognitive bias. Because the market does go up, basically, and it goes against what you believe. Well, you're not going to believe it as strongly because you've got a long and a short entry, and you're going to be mentally in the framework of looking for that entry point of that other game plan, other position, basically entry. So that helps. So it's very, I wouldn't say it's complicated, but my trading style is getting laid, I guess you could say, and it works. You know, as long as I don't overtrade. And you can see here, this is my history. So break and retest. Is 12%. I forget what the high percentages are, the high probabilities, but I forget what the I think that might be return, 12% return out of all the trades. I forget what it is. So basically, yeah, they're all profitable. But break and retest and breaking the highs and lows are more profitable than the others. Okay, we've got a few extra ones. See chart. So basically, that's from point 5 to point 3, and I've decided we're going with point 1 based on the volatility within a range at open beyond a certain point. No, at open we've done that one. Within a range. So if price trades within this range, we're not going to trade it. basically, well, we're not going to trade up there anyway, so we can basically that up there probably. Yeah, probably cover that all up. Probably. Give it some room there so we can exactly see what's going on. Beyond a certain point, you go off here. Like, I don't think it's got to go that far, but who knows? It goes beyond 20, 21, 20, 21, 30, yeah? Really there? So beyond sort of like there. Okay, happy with that? And sometimes I look at inverse charts when I'm stressed, because when we're stressed, we see everything as negative. We probably look predict the market go to sell off, as I slightly am, but yeah, we're basically managing risk. I'm not going to look at that today. Set alarm. Set alarm for 9:34. That's to keep my concentration within a 20-minute time frame, because typically people can only concentrate for 20 minutes at that peak. So done. 20-minute timer. So we're going to need 20-minute timer when the market opens. Now I've got that on the side. What's the side? It's called sidebar on the iPad, something like that. So I've got that ready. It's very set at the moment, but hey, set 20. Yeah, great. So yeah, that's what we're done. Great, happy with that. Opportunity. Maybe I'll check out the Bollinger Bands here. It's not obviously it's not moving at the moment. Not daily Bollinger Bands, and we are at the lower bands. That's interesting. I haven't checked that. That is interesting. So typically you can see when it does touch the lower band, it continues lower. Has recent price action has, but that you can see a bit of support there. So who knows? I'm not gonna really look at that too much. And we're looking at the Nasdaq too. I just sort of don't have everything showing here. So is there opportunity? According to that, there's not. So minimum risk basically. Alright, so that's done. Happy with that. Then we'll just turn up at market open and go through the checklist and finish the checklist off. And well, basically, we'll finish the checklist off. We have to have a little bit of time and see what market's doing, and still see which levels it at, if any at all. So I'll open the entry rules. I don't know if I'll come back to mark that one off. I hope I do, but yeah, that kind of should be. Maybe I meant get it ready, so get the alarm ready maybe. Okay. So the entry rules. So price moves pre-market on breakout. It's done, but we haven't got a breakout. Like a break of the higher, break of the low game plan. So that that's sort of a little bit relevant. if you experience a near miss. So basically, it's on a bounce play, and the price bounces, and we miss the entry. That can raise sort of uncertainty, and sort of it's a near miss as well. A near miss, which is a dopamine trigger. So we'll basically mark that and leave. So firstly, we're looking at whether probabilities play out as expected. So, okay. So we trade at levels. We don't create new entries. We look at the candle strengths religiously on the 30-minute. Now I found that to be very, very helpful when we're planning to enter and when we're planning to exit. Ideally, get a 5-minute candle favourable side of the key level. And I've got these sort of shaded reminders here. Trade limit 1, maximum 20 minutes max. So after 20 minutes of trading, I need to really close my trail, run a trailing stop loss, and sort of reduce my concentration, because I won't be concentrating as hard. Market open is just really, there's a lot of concentration. There's a lot of work to be done. So that's it. So here we go. And that concludes the 12th of November 2024.